is on inventory systems, is looking at trading stock. So just before we even go look at the question, just a reminder, and remember this is all revision, trading stock, another synonym for trading stock would be stock, goods, merchandise, or even the stuff that we need to sell. So we are going to be looking at how do we go about basically keeping a record of the stock within a business. All right, so let's look at the slides. Right, so for inventory systems, there has to be proper authorization and approval when purchasing stock. Detailed stock records are maintained and any movement of stock are recorded correctly and promptly in the appropriate journals. When stock is delivered, items received are then compared with the delivery note or the purchase invoice, and discrepancies are reported immediately. These records are validated by a physical stock taking. So with this reminder, we have been doing trading stock since grade 8, when we started having a business and basically started selling items. These items, anything that a business or shop would sell, that would be their trading stock. That will be the means of how they operate in terms of generating any type of income. So with this question, we have activity 6, grade 11. We have activity 6 on inventory systems, and there's a quick disclosure for what is perpetual inventory and what is periodic. I want to delve into that concept a bit more. So when we talk about inventory systems, right, detailed stock records are maintained and any movements of stock are recorded correctly, right? And then we always do this by validating what inventory is in the storeroom by doing a physical stock take. When stock is delivered, there's always proof of the items moving from one place to another. We have, for inventory management systems, we have two types of methods, and that is the periodic inventory system as well as our perpetual inventory system. For perpetual stock systems, this is continuously being recorded. The value of the stock on hand in the trading stock account and the cost price of the goods sold are continuously being recorded and updated on the system. This is a method used when the business sells large items of high value and has a low stock turnover. Then we have the periodic stock system that only shows the stock on hand, or in other words, the closing stock value, once a physical stock taking has been done. The cost of sales can then be calculated and then used when the business has a high stock turnover and sells a variety of items at a relatively low value. So again, for perpetual inventory system, we have cost of sales and trading stock accounts show the movement of stock. We have trading stock deficit can be easily identified when comparing records with physical stock. And cost of sales is determined at the point of sale based on the markup percentage. In other words, let me just quickly have a quick demonstration as well. If we were to make an example of, in a business, when we would buy trading stock, right? So in this case, we are going to be using the perpetual. And I know what you're thinking, oh no, this is difficult. Sorry, this is recap. However, this is something that we actually have been doing since grade 9. So perpetual versus the periodic. When we buy trading stock in the perpetual method, what are we doing? In the general ledgers or in the journals, we are saying debit and credit something. We are saying, right, debit the trading stock with the balance, and credit either if I bought it cash, credit bank, or credit creditors. So this is how we normally would go about recording things in our ledgers and our journals. That's what we have been doing since grade 9. What we are learning now is that in the periodic, there's a different method. And this method is as follows. The periodic inventory system. The cost of sales can only be determined at the end of a financial period using a formula. And this formula is as follows: opening stock plus purchases plus carriage minus returns to the suppliers and minus the closing stock balance of the stock. Then we have, it is not easy to detect theft of stock as there is less control over stock. Trading stock is replaced by a purchases account. There is no cost of sales. So, looking at this again, when we buy trading stock, in the perpetual we would say debit the trading stock with the amount, credit bank or creditors with an amount. However, in the periodic, they would say they do not use a trading stock account, therefore they record it as purchases. So you debit the purchases for the amount and credit either bank or creditors control. Right, that's when we buy trading stock. Another thing, just to give you an idea, is that when we sell trading stock, right, in the perpetual system, there's more control. So a lot of things are being recorded, such as we will always say debit, credit. So debit, if we sold it for cash, it would be debit bank, or if it's on credit, it would be debtors for the amount, credit sales for the amount, and again this amount is going to be at the selling price amount, as well as recording the movement of trading stock in the perpetual, such as debit your cost of sales and credit your trading stock at an amount. And this amount is always going to be your cost price amount, which can always be calculated with your formulas that you should know by now. However, in the periodic, when they sell trading stock, they would then only record debit bank if it was sold for cash at the selling price, and credit the sales with the selling price. There is no trading stock. Do you see the difference now? Okay, that's just to give you a quick idea about it. Right, the next part in the slides, looking at activity 6.1, Cleo Stores sells sports clothes. The business uses the periodic inventory system and applies a markup of 50% on all products. For your required, which you have in front of you, 6.1.1, calculate the cost of sales for the period ending the 30th of June 2023. So because we are needing to have to calculate the cost of sales, we need to use the formula. And why do we need to use the formula? Because the method of managing the inventory is using the periodic inventory system. So to calculate our cost of sales, we would then use the cost of sales will equal to your opening balance plus any purchases plus the carriage on purchases, which is the cost to get it to your business, minus the returns to the suppliers and minus any closing balance of stock. We also have to go and look at what is calculate the gross profit for the year. This can be calculated by looking at gross profit formula, which is equal to sales minus cost of sales. And I'm sure you recall that this is basically the first part of your income statement. The next question, 6.1.3, calculate the actual markup percentage achieved. That formula should always be looked for in your formula sheet, which you should remember. And then the last question, give 2 reasons why the business did not achieve the intended markup. Right. In your information, the information was extracted from the general ledger on the 30th of June 2023. We have a list of balances over here, and I'm sure you can see that if we look at all these formulas, it will be very easy. It's much easier for us to actually just input all these amounts. So just a heads up, we have some adjustments. So all of these figures are not very accurate at the moment. We need to go and fix them first. The information below was extracted from the general ledger. For opening stock, Here we have our opening balance in case we need it for cost of sales. We have the sales in case we need to calculate the gross profit, and further on. So we're going to use that information one by one. Right, so for the first one, calculating the cost of sales for the period ending 30th of June 2023. Again, reminder that the cost of sales equals to my opening balance of my stock at hand plus any purchases plus the carriage on purchases. In other words, paying the transport costs, getting it to me, to my business, minus the returns to suppliers, and minus my closing balance. Using these items in my formula, we can basically look at the additional information and see what fits in where. So these are all basically balances given to us, and that's what we can use in our answer sheet. So in our answer sheet, you should have the following figures, right? So we have our opening stock, which is given to us, the 96,000 Rand. We have our net purchases. We have purchases here, 229,200 minus the purchases returns that was given, as well as adding our carriage on purchases, which is 43,200 Rand. So these are the initial amounts that we have, and reminder to always try and show your amounts in a bracket and show your calculations. The next piece of information that we have is looking at now, they say that no entries were made for the following transactions. We have certain adjustments that now have to be taken into account as well. Again, we are going to go through them one by one as well. So for A, we have an invoice for goods purchased amounting to 1,600 Rand, which was incorrectly recorded as 1060. The error must be corrected. Okay, so looking at it one by one, the first one, if you look at this information, an invoice for goods purchased amounting to 1,600 Rand was incorrectly recorded as 1060, meaning we were supposed to record 1,600, we only recorded 1,060. And I'm sure you can agree with me that this probably wasn't a malicious, mistake done with intent. So it was maybe just it was an honest mistake. So how do we correct this? What's happening now is that the invoice, meaning we purchased certain goods on credit and it wasn't recorded properly. So my creditors has to increase as well as my value of my goods that was purchased. So how do we go about recording that? So the difference, 1,600 Rand minus the 1,060 Rand will equal to my 540, and that means that my purchases needs to actually increase. So we're going to add the difference there, which is the 540 Rand, and that's how we will basically fix it here in the calculations. All right. The next one, the next adjustment, we are looking at adjustment B. They say Cleo took merchandise for her personal use on the 20th of June at a cost price of 400 Rand. The selling price was 1,200 Rand. What we tend to forget is that we always, whenever the owner takes trading stock for personal use, this is always called drawings. And when you are the owner of a business, you will never take things at the selling price amount. You will always take it at the cost price, because this is the cost of the business and this is a cost that you can cover yourself. So because she took stock, or because she took goods, merchandise or trading stock for personal use at a cost price of 400 Rand, that means that my purchases that I've purchased has to actually decrease with the 400 amount. So it's less 400 Rand. Do not make the mistake of using the selling price amount when an owner of a business takes something. Whenever it is personal use, that means it is drawings, and they always use it at the cost price amount. Right. For C is not applicable to the cost of sales. So we're going to skip to D over here. In D, they say that an invoice for stock purchased on credit on the 25th of June from Junaid Traders was not recorded. Again, an invoice for stock purchased on credit, meaning from our creditor. The invoice reflected the cost price of 1350 and the delivery charge of 200 Rand. Now, again, I think the way that this question is phrased is also sometimes that learners get confused. Whenever you buy something from a creditor, you will buy it at the price that they charge you, and that is the cost price for you. So that will be the 1350. The delivery charge to deliver the item for us, this is part of carriage on purchases, and that is an extra 200 Rand. So we forgot to record this. The way that we will answer it, the purchases will now increase with 1350, and we will increase our carriage on purchases with 200 Rand. In E, they say that goods returned to creditors amounted to 2,600 Rand at the end of the accounting period were not recorded in any of the books. So goods returned to the creditors. If something is being returned to creditors, that means we are giving it back to our suppliers. What could we have returned? Anything that we might have basically recently purchased has to go back to our supplier. So we are going to basically minus the 2,600 Rand, which is goods that or purchases that will be returned to my supplier. Okay, once you have that, you can put in your total. And those are the totals given thus far. The last adjustment is as follows. After consideration of all the above, the physical stock count on the 30th of June 2023 revealed that trading stock costing 84,200 Rand was on hand. So that is actually our closing stock amount that has been given as well. This is our closing stock amount that has been given. And then we have our 84,200 Rand. A reminder again that so just a reminder, over here we have the formula to calculate my cost of sales. Cost of sales is equal to my opening stock plus my purchases plus my carriage on purchases and minus any returns and minus my closing stock. That will be my cost of sales figure. And now we have our amount. If you add all of that up, we get to an amount of 243,490. That is 243,490 Rand. That is the amount for our cost of sales. I hope that makes sense to everyone. Right. The next questions for 6.1.2, they've asked us to calculate the gross profit for the year. In order for us to calculate the gross profit for the year, we are going to use a certain information. Right? And just a reminder, guys, that certain information has been given actually to confuse us. So, for example, if we look at the slide quickly, at the page, sorry. So, on the page, if you see, when it comes to the question is calculating the gross profit, the formula is your gross profit, which is sales minus cost of sales. And again, this all comes from my income statement, or rather better known as my SCI. Right, so it used to be income statement. We know that information from the statement of comprehensive income. So in order to calculate the gross profit for the year, just a reminder, right? It's always going to be your sales minus cost of sales. However, in exams, what we normally know it as is as follows. We would say sales and then minus any of my debtors' allowances and then minus my cost of sales, and that will equal to my gross profit. As you can see, they have given other operating expenses to confuse us, right? Because this is where gross profit stops. Okay, if they were to ask us to calculate the net profit, right, then we would have minused my operating expenses as well. Okay, so just remember that they can ask us certain information that we normally would have done in a full statement. So to calculate the gross profit, we will be using the 378,000 Rand and minus my cost of sales. Right, so remember there's also debtors allowances which has been given, the 50,200, and the cost of sales was calculated in the previous question. So you can use this cost of sales for 6.1.2. So what do they say on the slides? Calculate the gross profit for the year. Coming back, there's a formula to calculate this. It is always going to be my sales minus the debtors allowances minus the cost of sales, and that will equal to my gross profit. That information, we have information of the entries that were not previously recorded, which is C. They said that a debtor returned goods on the 30th of June, on the last day of the financial year, with a selling price of 3,600 Rand, which he said he did not order. So what happens now? We have to only basically record the debtors allowances. So this is an extra debtors allowances. So again, that will be deducted from my sales amount as well. We also have my cost of sales, which had been calculated in the previous answer. Take note that whenever you have to use information from a previous question, always make sure that you use your answer as is, even if you're not sure about it being correct. You have to follow the principle of still going forth with the question using information that you have been given. All right. So once we insert all of those values, the sales for 378,000 minus my debtors allowances minus the extra debtors allowances and minus my cost of sales, that will give us a nice gross profit of 80,710 Rand. That is the answer for this one. So calculating the gross profit for the year, it amounted to 80,710 Rand. Then we have the next question. They asked us, for Cleo stores who sell sports clothes, the business uses the periodic system. Calculate the actual markup percentage achieved in this scenario. So again, this inventory system applies a markup of 50% on all products. Calculate the actual markup. Again, we have to always look for this information on how to do a formula calculation. Look on your formula sheet, which will be given in an exam. I just want to remind you that you are given the formulas in your formula sheet. You have to know the formula. I just want to write out for you as well the ways that we can get this formula. So to get this formula, use your gross profit divided by your cost of sales times it by 100, and that is going to be your formula to calculate the markup achieved. However, you could also use an alternative method as well, which is actually to calculate the gross profit. Once again, you would say take your sales minus your cost of sales and then divide it into your cost of sales again. Times it by 100, and that will also equal to your markup as a percentage. which is exactly the same thing. So you have two methods of doing the same thing. Don't be afraid to obviously, work out your calculations, because these are easy marks as well. All right, then we have next one. Because we're given the gross profit, we have our cost of sales from the previous question as well. We have to calculate the markup achieved, we have 80,710 Rand, which is our gross profit, divided into my 243,490, and I get an answer of 33.15%. All right. Cleo stores, again, they sell sports clothes with a 50% profit markup, and we've just seen now that they've only achieved a 33.15% markup. So there's quite a big difference as well with the two markups. Again, they were supposed to have it at a markup of 50%. They only had 33.15%. So how do I go about using that information? What does that actually mean for the business? This means that why could they have done that? How could this been possible? Okay, it could have meant that they gave too much discount on certain items, goods sold at cheaper price due to a sale or specials, such as, for example, when in summer they like to sell winter clothing, blankets and things like that, or vice versa. Example, in winter they like to sell summer clothing or camping things as well. They like to sell it a bit more in winter. I think it's a bit cheaper. So because of these discounts, that could have created the difference in the markup percentage. This is the second go-to. There must have been probably a mistake or an error in calculating the markup, or errors in recording the actual price. Okay, so just to recap, for your inventory systems, right, it's all about the movement of stock. In grade 11, it's a bit, we're just using our prior knowledge to basically make sure that we've understood what inventory or what trading stock is, and then in grade 12, we will delve a bit deeper into that as further on. But otherwise, that's all we have time for today, and I hope that if you have any questions, please don't hesitate to message us in the comment section or email us, and we'll be happy to respond. And I hope that everyone understands, and good luck for the exams as well, everyone, and I hope that you have a lovely holiday ahead. Bye, everyone.